Greetings guys, I welcome you in this beautiful video. So we are going to be looking on how to trade boom and crash, or how you should be trading boom and crash. In other words, we can just call it trading boom and crash the right way. So thank you for clicking in this video. Before I can get started, you can like and subscribe if you're not a subscriber. So without any waste of time, let's get started in this beautiful video. So this is boom 500. So you know, a lot of traders, when they attend this market, they actually attend this market in this perspective, meaning they attend this market in these lower time frames. Sorry about that. Why? Because it looks approachable in this time frame, and it looks easily predictable in this time frame, because you can see there are just two different moves, the spikes and then the small candles moving on the opposite direction. But there is just one thing that I want to highlight that is actually going to shift your trading. It is going to shift your trading. So when it comes to understanding this market movement, you need to know that when we're talking about boom and crash, it is actually opposite market. We know that the crash is spiking on the downside and boom, it's spiking on the upper side, meaning it is just a rise and a fall in crash. So in boom it's a rise, and in crash it's a fall. So now here is the mistake that we do. This market boom, it is a market that shows you the rise, and the crash, it is a market that shows you the fall. But what we do is that we come in this market and we begin to sell. Why? Because we think it's easy to detect these small candles here. We begin to be selling all the way down, selling all the way down, yet it is a market that is here to detect a rise. That's why it is called boom, and that's why we suffer from these spikes, and it is very painful, because even stop losses, they cannot stop these spikes. So that's the painful thing. It is, why are we doing that? This is because we are very hungry for profits. We are hungry for profits. But the best thing that you can do as a trader, instead of focusing on these small candles, you rather focus on the opposite side. Why? Because these small candles are not dangerous compared to these spikes. Why? Because the spikes, they come with a huge move, yet when these small candles come in, they come in bit by bit. You can see them, you can observe them. Each candle, if it's a 1 minute, it takes it a minute. But the bigger one, it just happens within seconds, within a blink of an eye. So the right way, it is to approach boom and crash in a buying manner, and this is how you should do it. You don't need any indicator that is going to detect all these spikes. What you have to do, I once talked about this in the past, it is making sure that you do not focus only in this perspective, but what you can do is that you can go in a clear perspective, maybe let's say the 15 or the 5, and begin to approach this market as you are going to approach any other forex or synthetic index market, meaning now you forget about those small tradable candles, but you focus on how the price behaves, on how the price is acting. If you are to need your tools and draw something, you can be drawing what is drawable. For an example, like trend lines. You can draw trend lines if it is possible, and wait for breakouts where there are breakouts, and also indicate some downward channels or downward flow, and also expect some breakouts there. Then you are going to be profitable in that way. Just approach this market in a manner of a price action, as you are going to be approaching all other markets. For an example, here with this downward fall, remember it's boom, we are looking for upward opportunities, so that we are not facing those spikes. So what you have to do is that here we've drawn this downward channel. In the breakout of this channel, that where we are willing to enter our trades, our buying trades. So in such a way, in the lower time frame, it it will not look clear. It will look like we're out of our minds. Why? Because there is this series of small red candles, but here you see that there is clarity. If you are to suffer a loss, you are going to lose a little, because those are very, very small candles and they don't take much in your account. So you can be focusing on trading those breakouts of those downward channels or those downward trend lines, and then by then you will be profitable, because once you just target these breakouts, you know that you are going to get some few spikes. And the beautiful thing happens when we are in an uptrend, because you know that the market is now moving in your favor. You are going to be receiving those spikes now and then, for an example here. And the beautiful thing is that you shouldn't be rushing to be closing your trades when it is an uptrend, just like the one that we are seeing here. Where is this thing? Later, I can't find the arrow here. So we know that the market is on our favor. If it's in an uptrend just like this here, you know that you are going to be getting those pips as far as the market is moving in your favor. So there is no need for you to be rushing. There is nothing to fear. So the problem is that we want to sell in this kind of market, and then it just deals with us. And we also want to buy in a crash. It deals with us. So this is the right way to approach this market, and this is going to help you. Just go and try it out. Just go to that clear time frame, either the 5 or the 15, and check price movement there. Just for a moment, forget about this funny move of small and spiking candles. Just look at the price in this picture, but in mind having it that, okay, in boom I'm buying because I want to get the benefit of these big green candles. So thank you for watching this video. Remember to like, share and subscribe.